Hello, this is Mitch, and we are getting ready to go live right now. Hello there. I'm Mitch Goldberg. Welcome to my live stream, Be the Boss of Your Money, because I want you to be the boss of your money, not your money to be the boss of you. It's very easy for that to happen, by the way. So we have to take control, make sure we stay strong, and make sure we have the knowledge, the skill sets. And that's what I do as a financial advisor with over 3 decades of experience. I've learned a lot. I've seen a lot. I've seen a lot of people make mistakes. I've seen clients come in who've made all kinds of mistakes. I learned from that. I help them fix them. And I've made mistakes too that I learned from. Hey, I'm only human. Today's special on Be the Boss of Your Money is, generally speaking, the market update. It's really just all about earnings this week. So we're just going to continue to monitor things. I'm going to continue to give you the updates. Amazon smashes expectations. The news just came out. We're going to take a look at how Amazon is trading. And then what we're going to do is we are going to take a look at Roth IRAs, backdoor Roth IRAs, because with the Biden administration trying to push through some tax increases, I think it makes Roth IRAs that much more valuable. And we're going to talk about that too. So let's just roll the intro. Okay, you are watching Be the Boss of Your Money. We'll do a little intro music right now. All right. And then we are going to roll our quick intro. We've got a lot of good stuff to talk to you about. Here we go. Hello, I'm Mitch Goldberg. Welcome to Be the Boss of Your Money. This is my live stream all about personal finance. That covers a lot of different topics. So it covers things like investing, borrowing, saving for retirement, investing, financial planning, etc. We get into all of that right here. So what I want you to do is put on your happy hat, your learning hat, put on your learning ears, listen up, watch. While you're watching this, if you have any questions about the topics we're talking about or anything to do with investing, personal finance, the stock market, hit me up with your questions in the comments. I love hearing from you. It's the best part of doing this. If you're watching this in the live stream, welcome to you as well. And if you do have any questions, you know what to do. Hit me up in the comments. I love hearing from you. I will see those questions. Words of wisdom, words of encouragement are also appreciated. Hey, by the way, I am going tomorrow morning. Okay, I'm coming to you on Thursday, April 29th. Tomorrow, April 30th, is my first in-person networking event. I'm in a really wonderful networking group. It's like partially networking group, partial business fraternity, partial family. It's just an amazing thing. And we're having our first in-person meeting in 14 months. And I'm going, and I'm like, I can't believe it. I'm actually going. And we do our Zoom meetings all the time, and they're great and they're fun, but nothing is like the real deal and actually going in person. It's going to be great. So I want to know, are you getting out? Let me know in the comments. Are you comfortable going back to in-person events? Now, this event I'm going to, it's going to be on a rooftop of a fancy building with tents over it. So we'll be outdoors with a tent overhead. So if it rains, that'll be helpful. And the rules are temperature checks when you walk in. Everyone has to fill out a form. Wear your mask unless you're in a seat. And if you're sitting and eating, you don't have to wear a mask. So lots of rules will still be followed. We'll see how close everybody follows, but I'm pretty pumped. So I'm going. And I actually had lunch with a friend yesterday, outdoor lunch. I'm on Long Island and the weather's really nice now. So what do you think? Are you open for that? Are you going out to events, seeing people in person and doing all these things again, getting back out? Let me know. I'd love to know in the comments. I see a couple of people out there already. So I just want to throw this in there. Filippo, Apple has been dead money for almost a year now. Is the float too big for it to move now post split? You know, I don't. Is the float too big? I don't think the float's too big. That's not a call on whether or not Apple should go up or down. They're doing a $90 billion. They authorized another $90 billion of buyback, which ordinarily you'd think is like a mind blowing number, but their market cap is like $2.25 trillion. I mean, what they spend on a buyback is bigger than 95% of the companies in the S&P 500. It's really remarkable. I don't think it's too big of a push to truck with the size of the float. It's and maybe it didn't get the best reaction from a blow away, unbelievable earnings report yesterday. But it could also be an indication that the stock is up. Yes, not up a lot maybe this year, but it was up like 80% last year and 80% the year before. So a lot of good news is already factored into the stock. And it's maybe it's a little bit on the very heavily owned or over owned side. So it's really tough to attract new money into it. I mean, it's hard to think of an institutional investor that doesn't already have a stake in the company. Basically what they do is maybe they shave a little off, they buy a little more, and I don't know. I don't think so. I like Apple long, but hasn't moved since pre-split. Well, we'll see what happens. I mean, I hear what you're saying. But look, it had a really good year last year, though. So we'll see what it does. Howard is out there with bells on. You are getting out, my friend. You and I need to meet up. You and I need to meet up again at our local Starbucks. We have like 4 local Starbucks. We'll pick one. But the last one we met at was good. Maybe we'll get together. I haven't seen you in person in ages. And let's see what else. Filippo, you are just on fire. Priced in. Got it. Thanks, Mitch. Still holding. Maybe dividend raise. Well, yeah. That's exactly my sentiment right there. Thank you very much for joining me today. Also, Filippo, you're a good friend. I tagged you in a, I think it was this morning in a LinkedIn post about long straddles, something that you and I have talked about in the past. I don't know if you saw that. And if you didn't, it's okay. Now you could go ahead and look. So let's move on to the main show of the day. Okay. Wait a minute. Why am I not able to show my screen right now? Okay. So apparently the technology is not cooperating right this second. And that happens. That's the beauty of going live. So let's take a look at Amazon. We'll talk about it. Amazon sales surge 44% as it smashes earnings expectations. Like I was saying this yesterday about Facebook and Apple, and I said it about Google the day before, and Microsoft also. I said this. These companies, as big as they're getting, their numbers keep growing. Their revenues, excuse me, their earnings and revenues. It's like these companies are aging in reverse. They're completely defying the law of large numbers. And what I mean by that is usually as a company gets bigger and bigger, it's hard to maintain, let's say, a 30% growth rate as a company gets bigger. And eventually, a 10% growth rate is good, but it's off a much bigger base. But when you see Amazon, it just announced a 44% surge in sales surge, 44% as it smashes earnings expectations. That is like, as big as Amazon is, and as big as their numbers have been, especially pushed up by the pandemic. I don't know why my fourth screen is not working. That is really annoying to me. We don't need it. It's not the biggest deal in the world. I could just go through it like this. Okay. Gives me a chance to show off my other cameras though. Okay. Now Amazon shares, Filippo, to your point, are up 4% in aftermarket trading, which is a pretty good move for a company. Any stock aftermarket is 4% is a good move. Not like the Facebook move we saw, but these giants of the NASDAQ just became more noticeably gigantic. And Amazon is up $142 in aftermarket trading. If it opens tomorrow morning where it's right now, 3,611, it'll be a new all-time high for the stock, and just beyond impressive. So let's take a look at a couple of other things. Okay, the S&P 500 markets had basically, a pretty decent day today. New records. So the Dow up 239, but the S&P up, Nasdaq up, and up by nothing crazy. The Dow is up 0.7%, S&P up just about 0.7%, Nasdaq up 0.2%, Russell 2000 off a little, off 0.4%. VIX was up a drop, still at 17. And to me, as long as the VIX is under 20, I think we're pretty comfortable with the market. Okay, so I'm pretty comfortable with it. And if we take a look at crypto, Bitcoin was off about 4%, off about $2,200 or so. Ethereum was off a little bit. This is just, the day-to-day stuff. And I just feel like people by the end of this week aren't paying as much attention to crypto. They're paying more attention again to stocks. I guess just because the moves in some stocks have been just so big. And, on the day, Facebook was up over 7%, up $22 a share. I mean, do you know how colossal that is for a company the size of Facebook? Just looking for their market cap. So now it's a $940 billion market cap. I mean, Facebook is, to me, clearly the next company to reach $1 trillion market cap, and their revenues are booming. Advertising, small business. It's just, what can I say? I am blown away by this earnings season, and it's really notable in the largest NASDAQ companies, it's Facebook, Amazon, Apple, Netflix, Google, and Microsoft. Netflix wasn't so great, actually. So they were like the one standout loser in the top 6. But overall, these companies, like today, you see the numbers from Amazon. I'm blown away. So enough of that. Let's move on to something else. So this is a topic that I've been talking about, and I really want you to, I don't like to say take what I say with a grain of salt because I take myself seriously. But about 2 weeks ago, I was on here saying that, companies' earnings have risen so much in the last quarter, and earnings expectations, not this current quarter that's coming out, like in the fourth quarter of 2020, and earnings expectations have gone up so much, and earnings have been so good. You have to start wondering if analyst expectations have gotten maybe a little too ebullient, too high. And then what happens if stocks are priced based on investors' perception of the health of the underlying company. So when a company comes out with much better than expected numbers in earnings and revenues, the stock usually goes up. We call it a pop, because you have to reassess the health of the company. They're doing better than you thought, and therefore the company's worth more. Same thing to the downside. Okay. But at what point do we get to, or when do we get to the point where analysts' expectations and investors' expectations move so high that companies just can't meet these expectations anymore? And, there are plenty of companies that came out with pretty darn good numbers, in the last 2 weeks. We're in the earnings season of Q1 numbers for 2021, and quite a few companies' stocks went down. So it's not like everything is going up, but these, FANG stocks, their numbers have been so good that we still probably, in a lot of ways, aren't optimistic enough in terms of the health of a lot of companies. That's not a very specific thing, a lot of companies. But overall, investors' expectations become too high and companies just cannot beat these expectations anymore, then the stocks have to go down and adjust, or stocks stay flat so their earnings could continue to go up for a few quarters and kind of catch up to the price of the stock. Which happens first, I don't know. But, my concern has been that earnings expectations are too high. And clearly for the overall averages hitting, S&P hitting a record again because of great numbers. I think we're early. I just think, at least I've been a little bit early. I mean, I haven't been like a net seller or anything like that, but my concerns, I guess what I'm saying, should feel like they've been allayed. But I don't 100% feel like that, because now it's like we have to clear the next new higher hurdle for the second quarter of 2021, which we're in now. We're in the first month of it, in April, which is over tomorrow. First month of the quarter. Okay, Q2. So that's one thing. All right. So the next thing is this. Let's talk about, let's talk taxes. All right. May 15th is coming up. Taxes are due soon. But if you live under a rock or in a cave or something, Biden wants to raise taxes. That shouldn't be a shock. I mean, yeah, you have a Democrat in the White House. Yes, taxes you expect would go up. And he did say he wants to raise taxes on the campaign trail. So it's no shock. And for a day last week, the stock market, the Dow went down like 350 points one day last week, which again, it was maybe 1.2% on the day. I wouldn't call that a dramatic sell-off. I know some people who look at everything through the eyes of politics say, oh, that's it. Everything's over. You see, the market went down a lot. No, I'm sorry. 350 points is not what it used to be. This isn't your father's market. Okay. It's not that big of a deal. And by the next day, that down day was recovered and stocks have been hitting records since. And I've done my own research on this and I've written about it and I could show it to you. But since 1950, in years where there have been tax increases, either one or a combination of the following: personal taxes, corporate taxes, or capital gains, stocks almost all the time went up, not down. Part of that is because spending was accompanied with the tax increases. But so Biden pushed his $2 trillion stimulus plan earlier this year, and now the ink is not even dry yet on his infrastructure plan for $2.25 trillion. He had $1.9 trillion plan before that, a week before that, and now he's pushing roughly a $2 trillion plan, which he spoke about last night, which would include some tax increases for people who earn over $400,000, income tax increases, and moving the capital gains tax to 39, let's say around 39.5%, which would be the same top marginal tax rate for people who make over $400,000 a year. The capital gains, though, would go to that level for people who make $1 million more a year. He didn't say, is that per person? So would that be $2 million a year for a couple? $750,000 for a head of household, $500,000 for an individual. He didn't say any of those things. But the point is, I think we could feel comfortable that the corporate tax rate's going up. Taxes in general are going up. Okay, I see your comments out there, and I'm going to put that on the screen because that's a beautiful comment, Filippo. Thank you very much. All right, I'll put it on now. I think you should just manage all my money. Why, thank you very much, buddy. And you let me know. You let me know when you're ready to get started, and we'll get going. Okay, and make me filthy rich, Mitch. Yeah, that's the thing. I'd love to make you filthy rich, okay? But I don't think I can make you filthy in your line of work because you own a cleaning company. Hold on a second. Can you hear this? I just played the rim shot on the drums here. I just want to make sure you could hear that, okay? Let me know if you could hear that. I have all kinds of sound effects. Got that one. And we'll do a little applause for Amazon. Yeah. Puns, baby. Puns. And yeah, absolutely. We've got Andrew's out there. Do it, Mitchell. Thank you very much, man. And Josh is out there. Me too. And Josh, thank you very much for commenting in a Facebook. You know, I can't accept the comments on YouTube. Unfortunately, it's a regulatory thing. The comments can't be tracked in YouTube and saved, even though they could be on my personal YouTube channel. Okay. And yeah, Philippa takes time, puns. Yes. And I'm going to get on with the show here. I heard the sound effects too. All right. That's awesome. I'm very happy to hear that, because sometimes, you know, you just want to say, oh yeah. I could do that all day. All right. So let's talk about Roth IRAs. The beauty of a Roth IRA is that when you take money out of a Roth IRA, when you retire and you start living off of your investments, you don't pay taxes on the distributions from a Roth IRA. The thing is, with an IRA, you put money into it, you get a nice little tax deduction. And if you make under $400,000, your taxes presumably are not going up. Then, you know, you get the same tax deduction. If you make over $400,000 a year, you know, putting $6,000 into an IRA or $7,000 into an IRA, if you're over 50, is not really particularly a meaningful amount of money. But there are also income limits, like $140,000 for a couple to put money into a Roth IRA. Okay. So there are income limits in terms of how much you could put in there. I just want to make sure I gave you the exact right numbers. Oh, I don't have it on my screen. They change once in a while. So no big deal. But there are income limits. There are income limits in terms of how much you could put into a Roth IRA. So if you're making $400,000 a year or more, you are not able to put money into a Roth. $6,000 or $7,000 into a traditional IRA is just not really cutting it for you. Yes, you could max out your 401k, but the beauty of the Roth IRA is if you could just get some money into that, it could grow tax deferred. So for those of you who do have a Roth IRA already set up, the value that a Roth IRA brings to you in terms of after-tax money just got more valuable. Or we didn't see the tax increase yet, but I would expect it to become more valuable to you. And it'll be hard to envision taxes coming down again in the near term, even in the long term, because we need the money. We've got a huge deficit, massive budget debt, massive amount of national debt, and we've got to start chipping away at it. But if you want to, you could do something called a backdoor Roth IRA, where you could put $6,000 or $7,000 if you're over 50, $7,000 on 50 and over 7,000, under 50, $6,000 into a non-deductible IRA. What is that? So you put money into an IRA. Normally, you would deduct that. So if you put $6,000 into an IRA, you get a $6,000 tax deduction. Well, don't take the deduction. You just put the $6,000 into the IRA. So therefore, it's non-deductible. It's not like a separate kind of account. It's a non-deductible IRA as opposed to an IRA. Just open up a new IRA in your name, put the money in it, don't deduct it, and then move that money into a Roth IRA. All right. And that's your backdoor Roth IRA. And you could put $6,000 in for last year, for 2020, and $6,000 in for 2021 for a total of $12,000. Or if you're over 50 last year and this year, right? Let's say you turned 50 the year before last year, you could put $7,000 and $7,000, so $14,000. Is it the biggest amount of money? No, but the beauty of it is that money grows tax-free instead of tax deferred. So I think Biden is going to make Roth IRAs great again, because of his tax proposals. And if you are someone who does have a lot of money already in your IRA, if you convert there's no income limit to convert an IRA into a Roth IRA. The government loves when you do this because every time you do that, you owe taxes on all that money right away. Money that comes out of the traditional IRA and goes into the Roth, you don't pay a 10% penalty for an early withdrawal, but you do have to pay all the taxes. And the taxes, the amount of money that you move from the traditional IRA to the Roth IRA, even if it's all the money or part of the money, whatever it is, it counts as income. So you could actually raise your income into a new tax bracket, to a higher tax bracket. So you definitely want to work with your CPA and make sure you might want to make sure that you're not stepping over into a new tax bracket, okay? Higher tax bracket. So, but if you do that, then the money grows tax-free after that. So will you have enough years ahead of you for the money to grow tax-free to make up for the tax that you just took and then some? And I see a lot of people who I think it is well worth it to make that move. The question is, where does the money come from? So let's say you have a $200,000 IRA, you move it into a Roth IRA. You've got $200,000 of income that you owe taxes on from that $200,000. And now you've got $200,000 in your Roth IRA. But if you're taking the taxes out of that money from $200,000 from your IRA, so you're only going to wind up putting, like, let's say $140,000 into your Roth IRA. Now you only have $140,000 to grow and compound. In that case, I don't think it's going to be worth it because you don't have the money set aside to pay the taxes, and it's going to be hard to make up that difference. So there are a few ways to take a look at the Roth IRA conversion and the backdoor Roth IRA. That's something we can definitely talk about. But I do think these are worth exploring for a lot of people. But I think that goes to even more people because of what we expect to see, some tax increases coming up over the next couple of months, depending on how we see the proposal. So I thank you very much for joining me. Let me just take a look, see if there's any other comments out there. All right, I've had your comment up there the whole time, so you're going to be famous now, Filippo. So I'm going to play some music. And when you hear the music on, who else is out there? Josh. Guys, thank you very much for watching. So it's Thursday. I'll see you on Monday, unless anything like really crazy happens tomorrow. All right, guys. Thanks, and I'll see you soon. Bye.